But it's specific towards just certain set of stocks, more of stock specific based on the chart. First one which I picked up is a Bhavan SH Kelkar. SHK is the script code on NSE. Looks very attractive because the stock is confirming a breakout on more of the monthly charts. So would suggest a buy on SHK for a target of approximately 160, which is approximately 10% higher from current levels. Stop loss to be kept at 140. And the second is what I would recommend as a sell. I think looking at the market structure and the weakness since last 2 days, it's prudent to have a mixed kind of a trading setup. So one sell call, that's on Bandhan Bank. The stock clearly showing signs of weakness and being unable to bounce back. Even the last 1 week of the market recovery. So sell with a target of 300 approximately and stop us at 330.
All right, that's the ideas coming in from Kunal. Ashish, good. Ashish, what are your queries for the viewers? I rather, what are your high risk and low risk ideas for the viewers? I stand corrected.
Yeah, my high return idea is going to be Morepen Lab. They are coming out with numbers tomorrow. I'm expecting their sales will simply double from here, and net profit will also go up at least by 300% in this quarter. Another trigger is as they are getting $100 million investment from a Swiss company for their further expansion. This will also take the stock to new high. Again, if we see the business profile wise, they are generating around 62% revenue from API, and there they have done a capex of around 180 crores already. So the result will also start coming in this financial year. And their home business, the diagnostic business, is just booming because now everybody want a blood pressure monitor, glucometer, thermometer, everything. Earlier, which was not necessity, now you are going to have this, and they are the leader in this segment. So Morepen is my pick number one. Next pick is low risk, low return is Steel Authority of India. Again, this is a company where I'm expecting. Last year they made a profit of 2,000 crore in full year. Just quarter profit only will be 3,000 crore, and the way steel prices are going up. In my view, this is most underrated stock, and now you are going to see a vertical run up in sale. So my target for sale in next 3 months is around 150, and 6 months 175.
Well, interesting calls there, Ashish. In fact, you may already have answered a few of our viewer queries. Speaking of which, let's go across to the first one. And I know a lot of you have tuned in on YouTube. We'll come to the live queries in a very short while. Let me just take a few queries that we've gotten on Twitter first, though. The first one is from Abhik Mitra, and this one is on Motherson Sumi and Jubilant Foodworks for the next 6 months to 1 year. So since it's a short-term query, I'm going to go across to Kunal. These two counters, Jubilant Foodworks in particular, a lot of people would say, at least on the fundamentals, would be very interesting because if you have localized lockdowns, I think people will eat pizza more often than not, right?
Absolutely, Alex. So it's absolutely perfect to try and analyze it in that regards. But when you look at the charts, I think Jubilant Food Work has been one of the, I would say, rock solid charts in the last 1 year. It's managed to wither a lot of the volatility which the markets had offered had offered over the last 12, 13 months. So yes, the stock also went through a sharp correction, but then it managed to recover and make a new high for itself. Was among the first mid cap or tied to large cap names to try and do that. I think at current levels of 2,900, it's a good buy on dips kind of an opportunity. And if the stock provides any kind of a correction, I think 100, 200 rupees odd comes back to 2,700 levels. That's a good level to try and enter Jubilant Food.
Right, we have a next query coming in from Sumant, and that one's also a Twitter query saying that should I buy Biocon at current market price? Kunal, what's your take on Biocon? Worth buying at current market price?
Not really, Cheryl. I believe that Biocon, I think, has been one stock which has been looking a bit more weak on the charts. We were discussing this, I think, a couple of weeks back as well. That how that the gap down which was created for Biocon, I think approximately 2 months back or 3 months back in the month of January somewhere, that has left to a sharp gash towards the stock. It's been unable to break past about that 430, 440 range or 445 range on the upside, if I'm not wrong. So I think till the time the stock is unable to break past about those levels. It's more of a time-wise correction as well as a price-wise correction which the stock has seen. So rather than looking at buying on dips, it's much more prudent to try and buy the stocks when it actually goes through a trend reversal. As of now, there are no signs of trend reversals for Biocon.
Okay, now I do want to point out, gentlemen, that the queries are absolutely flooding in, so request you to keep your answers as short as possible. I'm going to start with the YouTube questions now. We've got a question from Krishna on JK Paper, bought at levels of 109 per share, and he's got a long-term horizon for this. He's asking you, Ashish, what would you say in terms of fundamentals? Should he hold on to his investment?
See, in my view, again, problem is that the paper stock is, first of all, again, the lockdown is coming, across the country. So this was the earlier reason when the stock went up of paper stock, that lockdown was eased. So there was good demand of paper. But again, demand is coming down. So my suggestion will be to exit from JK Paper. Instead of this, if you want to be in commodity play, then look at sugar stocks, which can give very good returns compared to JK Paper. So paper is avoid from my side, and sugar sector looks good.
All right, the next query is coming from Shanmuga Sundaram, saying that he's bought 50 shares of Amara Raja batteries at 840 rupees per share. He wants to know the prospects in light of the EV battery manufacturing as well. What's your take on this particular counter, Ashish?
See, again, all battery companies have really done well over a period of time. But again, we have seen Amara Raja battery has started coming down from 1,000 levels to current levels. So this slightly underperformed. So I'll advise to exit from Amara Raja battery also. And I suggest another stock which you may accumulate and you can get better returns is Polyplex Limited. This is a company where stake sale by promoter is going to happen in coming months, and you can see very good valuation at which price they are going to exit. So you'll make more money by investing in Polyplex.
Coming to you on this one, Kunal, this is a futures trade. We've got Kijar, who's bought M&M May call option, 780 call option. Which one? So would you advise him to hold on or exit?
I would advise him to exit. I think the stock is, even on a day like today, or in fact last week as well, when the markets bounced back, the stock did not see some decent bounce, and today I think has managed to break back below its major support level of 750. So I think if the stock closes below 750, say for 1 or 2 days, then I believe it could be sign for more correction to come into M&M. So it doesn't make sense to hold on to option price because they play a bit more tricky when you see a downward trend on immediate basis. Option prices, they go through a very sharp kind of a correction. So I would suggest an exit on M&M call option, which you have at 780 strike.
All right. Our next query is coming in from Shubh Mathur. He wants to enter the chemicals and fertilizer space. He's identified a few stocks as leaders, that is Navin Fluorine, Deepak Nitrite, as well as PI Industries. But he wants to know whether he should look beyond them, and if not, when can he actually enter this particular space? Ashish, what's your take on chemicals and fertilizer space? And like Shubh has also said, he's identified a few leaders. Should he look beyond them, and should he enter this particular counter?
Yeah, in fact, all three stocks are blue chip stocks in my view, and the way prices are going up in chemical space and fluorine particularly space and coolant space, all they will continue to do well. This quarter, you are going to see a bumper results from all these companies, but at the same time, only thing we need to account for is as stock have moved up quite a bit, so that kind of returns which you might have got if you could have invested 3 months back, you are not going to get. So look at some new stocks in my view. Look at Jayant Agro Organics. This is 190 rupees a stock. Look at Bodal Chemical and Tata Chemical. If you ask me, these three stocks can give you even very good returns once these quarterly numbers are out.
Ashish, coming back to you on this one, Anjali has bought shares of IOC at an average price of 100 rupees, and she's accumulated this over a period of 2 years. she's very clear that she does not want to sell. And I think apart from the dividend income that she's gotten from this stock, she hasn't really made any money. But she's asking, should she nibble into this counter right now? At what price does it look attractive?
See, IOC, I'm very bearish, unfortunately. So I'll not give very positive view about this because again, in oil marketing companies except BPCL, none of other companies have given good return. So if you want to remain in this particular sector, ONGC can give you even better return compared to IOC. So my suggestion will be to come out of IOC and look at ONGC, which is better bet.
Right. We have a query, we have actually two queries coming in on Tata Motors. I club both of them and come to you, Kunal, on that. One is from Seems Kumari saying that she's bought 300 shares of Tata Motors at 320 rupees per share. Wants to know what's the outlook of the stock in the near to mid term. And the next one is from Radesh. He's saying, should he buy Tata Motors now or should he wait till it goes down to around 270 levels?
See, I think the answer to that is very, very simple according to me, because after 4 straight quarters of uptrend, when the stock was almost at 60-65 rupees and stock managing to jump up to 350 rupees, it's bound to be that for a couple of quarters the stock may remain a bit more volatile, it may remain sideways, it may try and be more choppy. So if you can try and use that choppiness and try and average it out further for guys who have investments at higher levels, and specifically for someone who's looking to enter, you should start entering at the current market price and look to add on significant dips. I think that's a better strategy for a stock like Tata Motors, because after 4 straight quarters of uptrend, I believe that it signals that this stock is ready for a multi-year uptrend for itself. So you may have a couple of quarters where the stock may go through a correction, but that should be taken as a good averaging opportunity.
Okay, we've got a question coming in from Danny Verghese, and he's holding HDFC AMC at levels of 2,820. He says, according to him, the results were okay, but he sees the market share going down. Ashish, there are some that question investing in an AMC in the first place. And while I don't know what your view is on the space, how do you look at HDFC AMC as a counter?
Yeah, actually valuations are quite rich of HDFC AMC, and the kind of growth we have seen in past may not continue going forward, because some of the top key people have left and joined some other AMC. So effect is of that particular shift also. So my suggestion will be to come out of HDFC AMC as such. And though AMC business is good and consistent business, but in my view, instead of this, look at CDSL, the kind of growth stories there. This will give you better return. Even India Energy Exchange is another stock which is also multi-bagger kind of a category. So if you want to remain in this segment, CDSL and IEX are better bet.
All right, our next queries come from Abhi. He's saying that he's holding Prestige Estates, 200 shares of it, which he bought 4 months ago at 291 rupees per share. He wants to know what's the short-term view coming in for this particular counter. Kunal, what's your take on Prestige Estates? Definitely the real estate sector, beaten down sector, is seeing a comeback, but how is the charts looking for Prestige Estates over the short term?
Well, I think over the short term, it's a bit, I would say a bit negative, because the stock is finally challenging its major support at this 270 level. So if you look at the charts from January 2021, that's almost 4-5 months back, the stock was multiply or continuously testing this 270 support zone. I think today is confirmed a breach below this support zone. So it's confirming some sort of a short-term breakdown. I would suggest that if you're looking to accumulate, and assuming if you're looking to hold on to it from a longer term perspective and want to convert your short term holdings to long term, then I would suggest that look to average further if the stock comes back to 240 levels. So I think there could be an immediate correction of at least 30 to 35 rupees on the stock price in the very short term.
Okay, coming back to you on this one, Kunal, this is Siaram Silk Mills that we're talking about. We've got Nino, who is bought at levels of 160. The stock is currently trading over 200. So, and in fact, it's got quite the pop in today's session as well. What, according to you, is a good exit level?
So I think if it's very, very near term, then I would suggest 220 to 25 as a good exit level for CRM Silk. The stock has a tendency of coming very close to its previous lifetime highs or swing highs, and then the rally abating, and then the stock coming back into corrective phase. Previous high was approximately 225 to 30 for CRM Silk. So I think in that aspect, you should be looking out to book profits closer to 225 range.
Next query is coming from Sri Charan saying that he wants to buy Sundaram Fasteners at current levels with a 3-month horizon that he's looking at. Kunal, how does this particular counter look? Make sense to buy at current levels? Sundaram Fasteners, that is.
Yeah, I think it's been a fantastic stock. I remember, tracking this stock quite closely many years back. It has done wonderfully well. It's more of a trending, classic trending natured, stock price. So it goes into very strong periods of uptrend, and then those typical periods of consolidation where the stock remains sideways. So I think it's a good portfolio stock as such, provided you have, a much higher time horizon. So a 3 months could be a very short term time horizon for a stock like Sundaram Fasteners. I would suggest that you should look at it from more of a longer term view and then hold on to it as a strong portfolio stock.
This is documented. In fact, the aviation companies went through quite the torrid time in the year 2020, and in fact, over the last month and a half, 2 months also, you've seen load factors absolutely plunge. We've got a question from Ijaz on SpiceJet for the long term. Assuming that you have this secular story for aviation in India that is intact, once you go through this turbulence, would you say that now is a good time to buy and to accumulate?
Okay. Okay. So my suggestion is not to invest still in aviation stocks because we are still not sure how long this phase will continue because of COVID. So many restrictions are there. So I like to buy this stock once it reaches around 45 rupees SpiceJet because 52-week low is around 38 and high is almost 100 plus. So we'll get to buy the stock even at lower rates in coming time. But at the same time, even Indigo though is not falling that showing a lot of resistance, but sector is totally avoid at this point of time.
We avoid is the call coming in for the aviation sector. The next query is coming from Indu. She's saying holding Z Entertainment 500 shares at 205 rupees per share. She wants to know what's the short-term view on this particular counter. What's your view on Z Entertainment, Ashish?
See, this is again a very underperformer kind of stock. If we see stock is moving in range of around 50-60 rupees for quite some time and not going anywhere. Even result side, not too much improvement is there. So instead of this, I'll recommend few other stocks which can give better returns. So look at stocks like JBM Auto, which is a pure EV bus related story and can give very good returns if you can remain invested for next 1 year. Or stock like JSW Special Spark Limited can give you very good returns if you can remain in and this is stock for 6 months. So Z is a avoid from my side.
Okay, I'm not really sure if this is actually Balan. So if you have 200 shares of Infi, TCS, Mindtree and Reliance, then you have quite the portfolio. So really the question, Ashish, is that Balan is asking whether he should sell shares of the companies that I mentioned and buy an equivalent of Happiest Minds. Is that something that you would do?
Depends actually because the stocks which you are holding are blue chip stocks and you the Happiest Mind is the mid cap kind of stock that you want to own. But surely Happiest Mind will give you better return, but it's a high risk, high return kind of profile because your current stock holding is not having that high risk element with this. So my suggestion will be you can partly liquidate Infosys and TCS and shift into Happiest Mind. The rest, I think you can remain invested with a good portfolio.
All right, taking a detour from our YouTube queries to the Facebook query that we received from AK Singh, saying that he's bought Vedanta at 150 rupees per share. He wants to know if there's any chance of this particular counter going up to 400 rupees per share in the next 1 year. What's your take on this particular counter, Kunal? Any scope of it rising to 400 levels in the next 1 year, Vedanta?
Well, very difficult to say that whether this will happen in 1 year, but the metal stocks have gone through a completely different tizzy altogether. This seems to be more of a long-term trend for metal names. Looking at the strength on many of these stocks, how many of these stocks have gone through their 10-year, 12-year breakouts, for example, large cap names like Tata Steel, JSW Steel, etc. It seems to be that even Vedanta would probably come back to at least hit back its major highs. I think if I'm not wrong, the 10-year high or the 6-year high for Vedanta was approximately 350, 360 levels. So I would sense that possibly over the next 1-2 years, the stock can at least retest that 350, 360 mark.
Okay, I'm going to come across to you, Ashish, on this one. We've got multiple viewers. We've got Rajan, we've got someone else also. We've got Manjunath, who's bought HDFC Life. Rather, Rajan wants to know whether to buy at this point. Would you say that this is a stock that you accumulate over a period of time and you hold for a sizable time frame?
Yes, I agree. These life insurance stocks are typically long-term holding, and they are having a very good business model where growth in new premium as well as repeat premium is ongoing. So HDFC, again, the market leader in this space, will continue to do well. Also, at the same time, I'll also recommend Bajaj Finserv even at this price because they are having both mix of life and non-life with them, and the kind of growth and the numbers which came in the last quarter. This is again a stock which can give you around 20-25% kind of return. So HDFC Life and Bajaj Finserv both looks good.
All right, our next query is actually coming in on Vector Foods, and this is from Ritesh Sharma, saying he's bought 28 shares of Vector Foods at Mrs. Vector's, that is, at 600 rupees per share. Wants to know whether continue to hold or should go ahead and book a loss. What's your take on this particular counter, Kunal? Yes, it's a recent listing, but will you be able to help Ritesh on it?
So I think whatever the history of the stock price has shown, it's not encouraging. The stock is still under a bit of a downtrend, but there's just one I would say positive factor which has emerged in last 2 days for Vector Foods. So price wise it's in a downtrend, but some of the indicators like what we track, MACD has come back into positive for the first time I think the last 2 months for the stock price. So that could probably mean that there may be a relief rally into the stock price. So if you bought at higher levels, and if you're looking to average and specifically looking at it from a short term, I would suggest that averaging at current levels for a pop or for a trading pop of at least 15-20 rupees could be a good short term strategy.
Okay, I'm going to slip in one last query if we possibly can. I'm coming to you, Ashish, on this one. Parag Milk Foods, very short answer. Would you buy for the long term? Abhishek wants to know.
No, I'll not like to buy very underperformer kind of a stock. Instead of this, you buy Steel Authority of India, you are surely going to get 50% kind of upside in next 1 year. So no point in buying Parag.
Mahindra. Come to an end of our query segment. Thank you, Kunal, and as well as Ashish for answering all the viewer queries, giving your idea on Reliance Industries as well as sharing your high risk and low risk ideas. So that is the end of the query segment. But for all of our viewers, see you tomorrow at 11:15 a.m. on all the social media channels where we will be live and we will be taking your queries. Alright, let's take a shift now and let's talk about earnings. And Mahindra Logistics had come out with this Q4 earnings. We're joined by the management, that is the CEO of Mahindra Logistics, Ram Praveen Swaminathan, to take us through the earnings and talk to us about the way going ahead. Good morning, Mr. Swaminathan. Thank you for joining us on ET Now. Let's talk about your earnings. And the company saw very strong revenue growth of about 20% in the quarter gone by. What are the factors that actually led to this particular performance coming in for the revenue, as well as do you expect this growth in your revenues to continue going ahead as well?
Yeah, so revenue was up 20% as a company, driven mostly by growth in our supply chain businesses, which grew by 28% year on year. What's been driving that is three factors: recovery in the auto segment, continued strength in the farm sector, and our continued expansion in e-commerce and consumer. We hope to continue to see this trend line over the rest of this year as well, though there will be some short-term challenges because of the COVID-19 pandemic.
We've seen the surge in the COVID-19 cases very different to considering what has happened the last year around. So given that the second wave of COVID-19 is here, it's hit the tier 2 as well as 3 cities. Could you see that have an impact on your auto as well as farm sectors, which you mentioned actually have supported the earnings in Q4?
Yes, I think one should expect some level of impact. The early signals are still mixed, so we can't say that there's a clear trend. But given comparing versus last year, I would say one would expect some impact this year.